Do you want to use an FHA loan, a VA loan, or a conventional loan? Today, I'm going to discuss that with you. Hey everyone, it's McKeown back again with another video this week. Today I'm going to discuss the differences between a VA loan, an FHA loan, and a conventional loan, and really what makes sense and which one to use. Now the first loan that I'm going to go over is a loan that I have talked about a ton on this channel, and that is the VA loan. Now if you followed me for a while, I am indeed a veteran. I've gone over and had multiple videos discussing how to use the VA loan just to purchase a house or to use it as an opportunity to invest. Now the biggest benefit with a VA loan is the fact that it is a 0% down loan. There is no other loan out there unless you're going to include potentially a USDA loan, but there are some caveats with that. It truly is the only opportunity you're going to be able to purchase a house with no down payment. Now I'd say the biggest issue when it comes to purchasing a house is going to be a down payment. Most people don't think they have enough money to put down in order to purchase a house, which very much is the case for a lot of first-time home buyers. But if you are a veteran and have access to your VA loan, then you can absolutely use a 0% down VA loan. Another aspect of the VA loan is the funding fee. Now this can be actually seen as a pro or a con depending on if you have any service-connected disability. If you are active duty, this will be rolled into your loan. But if you are not active duty and you've gotten out and have no service-connected disability, you will be paying a funding fee. Obviously, an additional fee would be a con, and if you don't have to pay that additional fee, then obviously it's a pro. Another positive side of using your VA loan is the fact that it's typically going to be a lower interest rate than a conventional loan. For example, I actually just closed on a property back in October. I do have a good relationship with my lender. It's actually the office that we are filming this in, but I was able to get a 15-year note all the way down to a 1.875% interest rate. And even if you're looking at a 30-year note right now, you're probably looking at the mid 2s to high 2s for a VA loan, when a conventional loan is going to be higher than that currently. Another aspect of the VA loan that I truly love, because the fact that I do not have to pay for it, is the PMI, or property mortgage insurance. If you're going to be using your VA loan, you do not have to pay PMI. In this wild market that is really honestly across the country, a VA loan may be seen as a less competitive offer than a true conventional loan. And I'll go into why sellers or seller agents may see this being true. Now within the contract itself, and when you close on the loan, there are a couple fees that have to actually be paid by the seller if you use your VA loan. Also on top of that, there also has to be a WDI inspection for a VA loan to be completed. On the conventional side, neither of these are the cases. But at the end of the day, if a seller or a seller's agent doesn't truly understand all the aspects of a VA loan, they're oftentimes going to select a conventional loan over a VA loan. Another caveat here for the VA funding fee, and this isn't going to really regard the seller or the seller's agent, this is more for the veteran himself. If you're using your VA loan for the second time or third time, or if you currently have a VA loan out, just know that if you do not have any service-connected disability, that funding fee is actually going to increase each time you use your VA loan. And actually, to piggyback a little bit off of my other videos, currently speaking, in mostly every single large metroplex, the VA loan is the only loan that you can use to purchase a multifamily that is larger than 2 units. For instance, if you wanted to purchase a triplex or you wanted to purchase a quad, a VA loan is not going to require that it be self-sufficient. And what I mean by self-sufficiency is the fact that a triplex or a quad using an FHA loan has to actually bring in enough income in order for you to qualify. Now, if you're strictly looking at a duplex, you can absolutely go VA or FHA, but a VA loan is going to be the best option and truly the only option for a low down payment if you're looking to purchase a triplex or quad. And that's actually going to take me to the next loan that I'm going to be talking about, and that is the FHA loan. Now, if you're an individual that is not a veteran and you're looking to invest in real estate, then the FHA offer is going to be the perfect offer for you. The FHA offer is a 3.5% down payment, and you can use this truly on a duplex, a triplex, or a quad, again a single family as well, but keep in mind it does need to be self-sufficient if you're purchasing a triplex or quad. One of the biggest pros obviously is being able to take advantage of purchasing a multifamily with your FHA loan, but also an FHA loan's interest rates are going to be typically lower than a conventional loan's interest rate. Another aspect of the FHA loan that can be beneficial for a ton of people out there is the fact that it's a little bit more lenient when it comes to negative remarks on your credit report. So whether or not we're talking about tax liens or collections or foreclosures, an FHA loan is typically going to be the easiest loan to qualify for, and if you have better credit, less debt, maybe more down payment, then you're going to jump up to a conventional offer. However, the biggest downfall or the biggest con of an FHA loan is the property mortgage insurance, or what we call PMI. Also, when it comes to cash flow or just saving more money per month, having no PMI on your monthly mortgage payment is a huge savings. So the issue with the PMI when it comes to the FHA loan is the fact that it's not able to be removed. Now, I am not a mortgage broker. I'm also not a lender. So there are going to be some aspects of an FHA loan where this can actually be said otherwise. But for the most part, if you have an FHA loan, you're going to be paying the PMI for the entirety of the loan. Another downside to the FHA loan is in our current market as it stands, it's truly seen as the least competitive offer. So if you are only able to qualify for an FHA loan and you're in an extremely competitive market, it's going to be very difficult to get a house right now just because an FHA loan is not seen as strong as a VA loan or a conventional loan, and obviously not as competitive as cash. In a normal market, the FHA loan would be a tremendous loan to get started with your first house as a first-time home buyer or potentially purchase a multifamily. However, with the market the way it is in a majority of the country, it is really difficult right now to get an FHA loan approved. And by approved, I mean approved by a seller and a seller's agent. Now, when it comes to multifamilies though, you're gonna have a little easier time with an FHA loan because you're gonna be well qualified and just using the FHA loan strictly for its benefits, not because your credit is lower or you have less down payment, but you're just trying to use the FHA loan for purchasing a multifamily. So at the end of the day, when it comes to an FHA loan, you may be asking, do I use my FHA loan or do I not? Well, an FHA loan is gonna be best served for an individual trying to purchase a multifamily. That could be a duplex, a triplex, or a quad. You're gonna be able to do that with 3.5% down. Also an individual that may be a first-time home buyer with a little bit lower credit score or maybe some more debt or some revolving issues on your credit report that can't be resolved, an FHA loan is going to be probably the best option for you. Now, when I wouldn't use my FHA loan is if you are qualified to use a conventional loan. If you are qualified to use a conventional loan, make sure that you're working with a certified mortgage broker or lender who can really run through the two options for you, saying, hey, this is what your mortgage payment's gonna look like if you're using a conventional loan, and this is what you're looking like if you use an FHA loan. Most of the time, a conventional loan will make the most sense, but that's why you need to make sure you're working with the right people who will give you the best options. So you may be asking, should I use my VA loan, or should I use an FHA loan, or should I use a conventional loan? At the end of the day, if you are a veteran and have access to your VA loan, I can't really see a time where you shouldn't use it. Now, the only real reason maybe you shouldn't is in the current market where a seller or a seller's agent may not value a VA loan as high as a conventional loan. Then it may make sense to use your conventional loan now, but for the most part, a VA loan is going to be better than any other loan out there. Now, the last loan that I'm going to discuss is likely the most used loan, and that is the conventional loan. So when it comes to the conventional loan, you oftentimes are going to see this loan the most because it is the most popular and the best loan out there unless you are indeed a veteran. So the biggest thing, as I mentioned before, with the FHA loan is the property mortgage insurance, or PMI, is throughout the entire loan. Now, when you have a conventional loan, you do not have to pay PMI after you have 20% equity in the property. So right away, if you put 20% down, you're not going to have to pay PMI whatsoever. Also, if you put, let's say, 10% down, and over the next couple years you pay that other 10% off, or maybe your house appreciates and you hit that 20% equity, you can actually get that PMI completely removed for the remainder of your loan. Another great thing about a conventional loan, if you do qualify for it, is it does still have a low down payment option. You could definitely take a 3% or a 5% option when it comes to a conventional loan. So technically, if you're comparing an FHA loan versus a conventional loan, you're technically paying 3% versus 3.5%, so it's even lower of a down payment than an FHA loan. Now, I'll be honest with you, most people that are going after a conventional loan are trying to get rid of their PMI, so they're actually going to put 15 or 20% down, but if you're a first-time home buyer, it's a great option for a low down payment cost. So you may be asking, okay, if it's the best loan out there and everyone's doing it, what are the cons to a conventional loan? And as I mentioned earlier, with an FHA loan having better interest rates, now a conventional loan is typically going to be anywhere from 1/4 to 3/4 of an interest rate higher than an FHA loan. However, when we're talking about PMI, your PMI on a conventional loan is going to be significantly lower. So if you were to compare apples to apples with an FHA loan on a property versus a conventional loan on the same property, as long as you have great credit and you have a substantial amount to be able to put down, or even just a decent down payment, more times than not, a conventional loan mortgage comparing to an FHA mortgage with the same down payment a conventional loan is going to be a lower total mortgage cost. Another great thing about the conventional loan that you can definitely put into use is the second home option. Now this option is not allowed with a VA loan or an FHA loan, so you can truly only use this with a conventional loan. And what a second home option is, if for instance I live in Dallas, I purchased a house, I can go to another state or a city that's far enough away and purchase a second house as my second home. Let's say I visit there frequently, or I've got family there, or it's just a place that I want to be able to purchase a second home for. You can actually buy a second home for 10% down. Also, another thing when it comes to a conventional loan is investment properties. Now, if you're an individual that is looking to occupy an investment property, a conventional loan is definitely not the loan I would suggest for you. And the reason being is you actually have to put 15% down rather than 3.5% down on an FHA loan. So you have to come up with a significantly higher down payment. Yes, your cash flow is going to be better because you're putting more down, but most people trying to occupy a property as a first-time investor are not going to have 15% down to put on an investment property. But maybe you're an investor that used your FHA loan first to purchase a duplex. Then you moved on and purchased a 3% down conventional loan. Then you were able to save up enough money. The perk of a conventional loan is you can still buy an investment property with 15% down. Now the thing here is if you do put 15% down instead of 20 or 25% down with a conventional loan, you're going to have PMI still, and you're going to have additional costs associated with that. If you can come up with the extra 5 or 10% down, it's definitely going to be the better route. But if you're small on change, 15% down is a great option to purchase your first investment property if it's something you're not personally occupying. Another con to the conventional loan is being able to qualify for it. So like I mentioned before with the FHA loan is going to be a little bit more lenient when it comes to credit, income, debt, maybe derogatory terms on your credit score. Now a conventional loan is going to be the opposite. A conventional loan is typically going to be more strict and require more income, less debt, so on and so forth. So at the end of the day, do you use your conventional loan, your VA loan, or an FHA loan? And I'll tell you right now, if you're looking to occupy an investment property, do not use a conventional loan. Absolutely use a FHA loan down the road and actually refinance that FHA loan to a conventional loan once you have enough equity. Now, if you're a strong individual credit-wise, you have a good down payment, this is your first house or maybe your second, third, fourth, fifth house, your conventional loan is likely going to be the best option for you. Now, if you are a veteran, conventional versus VA is going to be maybe a tougher decision for you, but as I mentioned earlier in this video, if you can use your VA loan, I absolutely suggest that you do. Before I go ahead and end this video, I will bring up one last type of loan. It's called the USDA loan. To be quite frank with you, I have actually never done a USDA loan in the 4 years I've been in real estate. It is something that is very rarely seen. It is a 0% down payment program in terms of a loan, but it is going to be very difficult to get it approved by a seller or seller's agent. Now, I won't go into too much detail about this loan just because of how rare it is. The biggest thing when it comes to USDA loan is qualifying for it. So if it is something that you want to research and look into, take a look at all the qualifications that it does require. A lot of the time it's going to be used for rural areas, and it's going to depend a lot on your potential income. So if it is something you're interested in, definitely take a look. If you do have any questions, just leave them down in the comments below. Hopefully this video at the end of the day helps you understand a little bit more about each potential loan program and which one may make most sense for you. If you do have any more questions regarding any of the types of loans I did discuss today, make sure to leave them down in the comments down below, and I would love to be able to assist in any way I can. Thanks again for watching, guys. Make sure to like and subscribe. It really does help. And stay tuned for the next video. It's actually going to be coming out at the end of this week. I'm interviewing another veteran who I've helped purchase 3 properties, actually 3 duplexes in the past 3 or 4 years. And it's going to be interesting to be able to see from his perspective what real estate investing has done for him.